Welcome to Buy, Hold, Sell. My name is Matthew Kidman, and we have two young stars of the market with us. Chris Dock from Wilson Asset Management and Steve Johnson from Forager Funds. Let's get on to some stocks. One of Australia's biggest insurance companies, AIG, made a big acquisition not so long ago. It took them into other areas such as business. Steve, got a view on AIG?
I'd sell it.
And the reasons why?
I think this is a really good business, and I think the insurance space in Australia, like the banking space, is a pretty cosy oligopoly where there's not as much competition as there should be. Yeah. I just feel like the cycle has run its course. You've got combined operating ratios at AIG now of 86. That is very, very, very low historically. You're still paying 12 times those earnings. So I think it's the wrong point in the cycle to be buying this stock.
Okay, and Chris, not many disasters, pretty benign. You agree?
Yeah, look, I totally agree with Steve there. To sell, Matthew, the insurance cycle has peaked. The insurers have had their time in the sun, including Suncorp, so we think that continues to roll over the next 6 to 12 months in particular, and so we put a sell on AIG. Okay,
let's go to the retail world and travel. Flight Centre. Aussie dollar coming off, is that?
Yeah, Flight Centre's a buy, Matthew. We haven't really seen a pickup yet in corporate spend in Australia, which we think can continue to improve over the next 12 months in particular, and leisure seems to be okay. The US business over there is improving for Flight Centre. We think it's a buy.
You're a buy at Flight Centre, Steve?
No, I'm not, and we like the business, again, probably don't like the price that much where it is at the moment. And I think that they keep saying that they've protected themselves against the Australian economy and the Aussie dollar, but I do think that it will be much more difficult for them if the Aussie dollar falls and Australians can afford to travel less than they can at the moment.
Okay, let's move to funds management. BT investment.
Don't like that one either, personally. The fund's up a lot over the past few years, but most of it's just because markets have gone up. They're not showing a lot of inflows there, and the performance record is not fantastic. So I can see outflows potentially in that business, and we all know what that means in the funds management industry.
Okay, agree or disagree, Chris?
Sell BT, Matthew. Hambro's been a huge success story for them in the last few years in particular. Quasi-equity market play, so we're quite cautious on the outlook for the overall market here and globally over the next 12 months. So we think BT's run a little bit ahead of itself, so sell.
Let's stick with the mid-cap space. COVERMORE, terrific listing, done well, got to be on it.
COVERMORE's a hold in our opinion, Matthew. Really strong management team, incredibly good cash flow that they produced at that recent result. So good exposure there to Flight Centre, so we're positive Flight Centre. So we think COVERMORE can have a pretty good period, but just at the moment a little bit expensive, so hold.
Too expensive for a forager like you, Steve?
Yeah, it's a remarkably good business. I mean, people look at it and say insurance, but they don't actually take any risk themselves. They're basically a broker. They're already 40% of the market in Australia, though, so I think their potential for market share growth in Australia is going to be difficult. That means the growth has to come from overseas. They're talking about a lot. Brings its own set of risks. I'm not saying they won't achieve that, but I think the price is top-ish, and you've got some risks around execution there, so give it a miss.
All right,
more avoid than a sell, let's say.
All right, let's go back to finance. Another recent listing, OZFOREX.
Really interesting business because I think it's actually priced reasonably attractively if you think it can continue to grow and if you think that this business can maintain its market share. I'm a user of the product and I'm also a user of Currency Fair, and I think those margins can still be squeezed. So I would say hold at the moment on that stock, but I can see this story going both ways over the next 5 years or so.
Too competitive in that market, Chris?
OZFOREX is a hold, Matthew. The biggest negative since the IPO has been the new account openings, so not enough volatility, particularly in the Aussie dollar, has certainly produced that result. So given we've seen a sell-off in the Aussie dollar in recent weeks, and we think that can continue over the next couple of months, that certainly bodes well for OZFOREX, but at the moment on evaluation, the valuation metrics we'll look at just a little bit expensive as well, so hold.
Thank you.